it doesn't look like it has been as much of a shockwave as a lot of people were expecting. I'll go through a few of those metrics now, and we'll start with the Mexican peso. We were looking at this over the course of last night. It's become a gauge on this election, of course, those expectations about what might happen to US-Mexican relationships. Really borne out by the performance of this, and a big fall, very big indeed. You can see just where it fell. That was the moment where it became clear that those polls weren't necessarily right. A big fall, down by 8% over the course of the last few days, but down more than 13% at one point. Here's an all-time low against the dollar, biggest daily move in 2 decades. Here it is at the moment. Let's see what the FTSE 100 is up to as well. Of course, UK markets actually had a bit of a kind of a fall initially, but then recovered over the course of the day and finished up 1%. How about the Nasdaq in the US? Again, is a story of it actually being far less of a market reaction than many analysts were expecting.
I think the reaction today when we look at the equity markets has actually been quite measured. Whilst it's been a very unexpected outcome from a political context, actually what we've seen is that whether we look at European markets or we look at the US markets, they're down, but only by a very small amount.
And it's worth saying as well, the Dow Jones is actually quite close to a new all-time high. But there's still deep nervousness about how President Trump is going to run the economy. And a quick glance through his economic pledges before the election gives you an idea of some of the boldness and, some would say, irresponsibility. And one thing economists will welcome is that he wants to build, pouring money into infrastructure, investing in crumbling bridges, highways, stuff like that. Actually, one of the few areas where Trump and Clinton did agree. But in characteristic Trump style, while there's no precise figure on how much he wants to spend, he did say he'd spend at least double what Clinton said she would spend. That was $275 billion. But here's the economic contradiction. He also wants to cut taxes across the board, both for households and for businesses. So the highest earners would have their tax rate cut from 40% over here for households, 40% down to 25%, while he says that he would cut corporate tax rate, federal rates, down from 35% to 15%. Enormous changes there. And if you put those two policies together, this is what you get, a massive increase in the national debt, up to about 11.5 trillion or so over the next decade, and that's up from around 75% of GDP, and this is the kind of slightly staggering thing, to 127% of GDP, not dissimilar to what we're seeing in Japan. What we also know is that President-elect Trump is not a fan of trade, at least trade deals. He's talked about dismantling the North American Free Trade Agreement, NAFTA. He's also said he might throw out forthcoming deals, the TPP, Trans-Pacific Partnership, and also TTIP. That's the proposed deal with the European Union. Finally, a big concern for markets is what happens to America's central bank, the Federal Reserve. Mr. Trump has accused its chair, Janet Yellen, of being political, and some fear she could be an early casualty of the Trump victory.